right, there we go. We should be live. Hello, everybody. Welcome, welcome. If you can hear me clearly, please drop a 1 in the chat. And also, if you can see my screen and my cursor moving, drop a 2 in the chat, please. Welcome, guys. Welcome, welcome. Got a lot of people in here already, which is awesome. And I see in the chat people are already letting me know where they're tuning in from. That's always cool to see. Yeah, drop in the chat, what state or country, if you're international, are you tuning in from today? That'd be awesome. Welcome, guys. Welcome, welcome. Let's see. All right, cool. If you can't hear me, please try refreshing. And guys, drop a 1 in the chat if you can hear me clearly. Vancouver Island, nice. Victoria, BC, nice. Sounds clear? Yeah, thanks, Jim. Appreciate it, guys. Nice, lots of 1s. Thank you. All right, all right. We'll get started in just a minute here. We'll give everybody time to join. And this is being recorded, and I'll send out the recording via email. It'll also be archived in the Trader's Handbook educational course, so you'll always have access to this. So if you've got to step away, no problem at all. Let me turn up my volume a little bit. There we go. Hopefully, I'll turn it up max. There we go. Testing, testing. Hopefully this is a better volume. Let me know in the chat, guys. Yeah, the webinar last weekend was recorded. We'll be sending out, I posted it on my YouTube channel already. So many of you guys probably already saw it, but if you didn't, you can actually go to my channel. I think it's the most recent video as well. Okay, volume's good. Perfect. Nice. All right. So let's go ahead and get started, and likely this webinar will be about an hour or so. That's what I'm shooting for. Again, this is recorded, so if you have to step away, no problem at all. But this will be a lot of fun. This is one of my favorite setups to study and to trade, and it can be incredibly effective, as we've seen earlier this year with CoreWeave, with Circle. When this IPO breakout works, it can be fantastic for your account, even if you don't have too much size into it, which I'll talk about in just a minute, because IPO is a little bit more volatile. I size these down personally, but just a little bit of size in a stock that makes a nice move can really move the needle. So this will be a lot of fun. So welcome everybody to the Trader's Handbook bonus webinar. Today we'll be focusing on the IPO base breakout, discussing that setup, what to look for, characteristics, and going through a bunch of case studies as well to bring this concept to life. So this will be a lot of fun. And if you do enjoy this video, please leave a like on the stream right now. If you're watching this in the future, leave a like on the video. And if you haven't already, please subscribe to my channel. I'll be posting a lot of great educational videos, live streams. I've got a lot planned into the end of the year. So if you're not already subscribed, 100% free. What are you waiting for? Go ahead and subscribe. And thank you guys so much for joining us today. This should be a lot of fun. So let's go ahead and dive right in. And here we go. So first things first, the IPO base. What is it? The IPO base is basically the first consolidation that occurs shortly after a new issue comes to market. And I think, this is important here. A new issue could be a spinoff like we've seen with Gev. It could be a direct listing like ARM, but most commonly it's a new IPO. So that's kind of why it's called the IPO base. This setup was developed by Mike Webster after studying IPOs going back to 1963. Is the only CanSlim O'Neill base that wasn't developed by O'Neill himself. So huge props to Mike. He's a fantastic trader, educator. Many of you guys, I'm sure, have watched a ton of his stuff, but huge respect to Mike for studying and developing this base and helping us trade it in the future. And the IPO base is actually the top performing base, going back and studying cup and handles, double bottoms, all those, flat bases, all those different types of bases that O'Neill discusses and how to make money in stocks. The IPO base is actually the top performing one that leads to the majority or the most market leader type move. So definitely a key setup to study yourself and to learn more about if you're not already trading it. So here is a little bit of context here. This title of the slide is called IPO Boom Zone. This is because IPOs, after they come public, and this is kind of the characteristic that the IPO base allows us to take advantage of, is many of them make extraordinary moves shortly after coming public. But unfortunately, after this IPO boom zone, often comes a bust where, maybe the lockup period expires, there's a major market correction, something changes, and the IPO just goes through the natural fluctuation that most of them do, which is a significant correction. And often they give back the entire IPO move, or even a lot more than that. And we want to protect ourselves from that while taking advantage of the IPO boom and this trend shortly after the IPO. And that's where the IPO base comes in, is it gives us structure to enable us to enter during this strong phase, manage risk, and join on for the trend. And then we'll talk about sell rules and how to manage a position to prevent yourself from holding through the IPO bust. But this is a characteristic that if you go back and study a lot of IPOs, you'll see this over and over again. Some stocks IPO boom zones are a lot shorter than others, but the outliers can make several 100% moves shortly after the IPO, but almost all of them go through significant correction. It's the rare stock that doesn't go through a significant correction, dropping 50% or more after this phase. So we definitely want to be prepared and manage our positions accordingly to exit, shortly after this begins. All right, so that is the IPO boom zone. This is a concept, basically, this is from the Trader's Handbook, if you're not already familiar. And this is kind of one of the 3 opportunity zones I talk about in the book. The IPO boom zone is probably the first opportunity to make first stock to make a strong move. Then after a significant correction or significant event comes a new momentum zone, and that growth transition zone as well often appears when the stock maybe has its first profitable quarter. Something changed in the business. Those are kind of the 3 opportunity zones, and this IPO boom zone is the first one that appears in a stock's life cycle. All right. So let's dive a little bit more into defining the IPO base. Basically, what you want to do is watch for a short base to form shortly after the IPO date, or a new listing or spinoff, basically a new issue coming to market. I like to focus on promising stocks with strong fundamentals, ideally in a leading group or theme. Maybe the IPOs don't have earnings growth just yet, but look for superior sales growth. Look for those can slim tigers characteristics that we've talked about a ton. Look for the stock being part of a leading theme. If we think about what are the strongest themes in the market right now, it's AI, it's energy, there's crypto as well. If a new issue comes to market and it's related to those themes, that's one to focus on a little bit more, especially if it fits the other characteristics that we're going to talk about. Once a new issue comes to market, what we're basically looking for is a base low to form, tight areas to develop, and low risk entry areas as it starts pushing up the right hand side of that first IPO base. And this base, as we'll talk about in just a minute, can be a little bit more shorter. It's a lot more compressed than a mature base, which is typically 4+ weeks, 5+ weeks in a mature stock. These IPO bases can be 10 days, very tight. So you have to be a little bit more focused and recognize when those bases are starting to form. What you also want to do is expect some volatility around the IPO base highs, that key pivot that is the standard pivot, but we'll talk about how to enter a little bit earlier to try to avoid that volatility, have a profit cushion going into that volatility so you're prepared. And then, as I've mentioned before, we want to use quicker sell rules to lock in profits when the IPO boom phase ends. So when that strong trend that takes everybody by surprise ends and the stock begins to roll over, whether it ends in a climax top or just begins a failed base breakout that then fails and rolls over, we want to be ready and exit the position and understand that this IPO boom phase can be amazing, but it's often short-lived, and we want to have more of the mindset of a swing trader than a position trader here. We want to be holding the stock for weeks and months, not necessarily multiple months or even a year, because often there's not many IPOs that their runs last much longer than a few months, at least this first phase here. So that is the IPO base. Here's a graphic I created to kind of visualize everything come together. Here is this initial move up. Not every IPO that comes to market will have an initial move up, and this can last a few days. It can last a few weeks. Typically, the start of the base happens after under 25 days. That's the ideal based on Mike Webster's research. But this initial move up, maybe there's an initial drawdown, and that starts the base. But I tend to prefer the ones that show strength right after its IPO. And studying a lot of IPOs that made big moves, it seems like the majority of ones that end up doing quite well have at least a little bit of initial strength. Once the IPO base begins, like I said, it'll consolidate just like a typical base, but everything's compressed. This can be, each of these could be a single day, these fluctuations. The depth of the base is typically, it's ideally between 12 to 15%, again, based on the research from Mike Webster. But I see a lot of them that are 20% deep, and some of the best ones are a little bit deeper, 31%. And I think eBay, going back in history, was even deeper of about 50%. A lot of it is market dependent as well. If there's a market correction that's going on during this period, the base is typically going to be a little bit deeper because these are, high beta. These are pretty volatile by their nature. So this base is going to fluctuate this depth based on the market environment. And you want to take that into context because, you don't want to throw out an idea because the base depth is 25% when the market corrected, 8% during that time, just because it's not this ideal 12 to 15%. Similarly, if the market is going higher, if there's a base depth of, 50%, 60%, that's too deep. That's a little bit out of character for what a winner would be. So keep the market context in mind when you're looking at the depth of this IPO base. As the base matures, as I talked about in last week's webinar, there's often early buy points, early ranges, tightness that form within this IPO base. And that's kind of the first opportunity you have to enter the stock while managing risk tightly. And we'll talk about position sizing in just a minute, but that could be a point where you start to build into a position looking to add at future ranges, as well as your final position at the actual standard breakout point as it breaks through those IPO highs. As I mentioned here, based on Mike Webster's research, IPO bases can typically be as short as 10 days. There's some that are 8 days, 9 days. So again, around that area, but some are a little bit longer. And if they're a little bit longer, you kind of want to look more for the characteristics of a more mature base, but those still can work really well. A recent example, if you think back, RBRK, that was a new issue that its IPO base was a couple months long, but then it made an amazing model book move and acted tremendously well. So again, with everything that I talk about and try to teach with regards to trading, everything is a little bit malleable. You want to be a little bit creative. So again, there's parameters to look for, but always think in context, always take a stock, on its own right, and just look for constructive price and volume action, that stair step price action, ranges tightening, and look for those promising characteristics. And then, don't think you have to memorize all these different parameters and everything has to fit completely. Be a little bit creative and malleable in your thinking there. So again, here's the earliest buy point. We'll talk about this and show some examples in the case studies. Your stop loss would be right under, that range here. Then as it moves up, there's another opportunity here. It tightens right below this base pivot. We get the breakout. This would be where you're adding as well, or, building your first position, setting your stop under that range. But this is a great representation of an IPO base. And by the way, guys, no need to take screenshots or anything like that. I'll send out these slides later on today with the recording. So, you'll have these, so no need to screenshot anything unless it helps you take notes. All right. So I think this is a good graphic, and let's keep on moving. So trading a base playbook. I talked about this in the previous webinar. Everything still applies to a mature base. Just again, everything can be a little bit more time compressed and a little bit faster. So we're looking for an extension down or gradual bottoming, tightness action within that IPO base. And often the subtle sign is that there's a failed breakdown. It looks like the stock is forming a base. It tries to break down, and then the next day we get a positive expectation breaker, and that begins the right side of the base. So everything can be, very quick with IPO bases. So everything here still applies. Just again, it can be a little bit faster with these IPO bases. So we're looking for signs of power off the lows, signs of relative strength. Look for the formation of the first higher low / tight area. And then as the base matures, and again, this can be faster for IPO bases, look for entries at ranges, moving average reclaims, constructive pullbacks, or other entry tactics as the stock is generally moving up the right-hand side of the base. These entries, again, should allow for tight risk management, under 4% risk ideally. These IPOs can be a little bit wider range. So how do we manage risk? If stocks are going to be a little bit more volatile, we have to widen our stops a little bit. Well, what we do is limit our position size. If your typical comfortable position is, 15%, 20%, you can tighten that up for IPOs and move the stop, adjust the stop a little bit wider while going to position size of 10 to 15% instead of 15 to 20%. So that's how we can manage risk while trading IPOs. Then, just like with normal bases, we're looking to have the majority of our position before the standard base breakout. I like to build maybe if I'm envisioning a 15% position, I want to kind of have 10% on at this early pivot, and then maybe looking to add another 5% here or on the actual breakout. So I won't build maybe my whole position down here because it is a little bit riskier or more failure prone, but I want to have my position on and a good cost basis before it runs into the volatility, because often there's shakeouts, there's fluctuations, there's gap downs that then recover at this area where it's more in the focus of the market. So building your position a little bit earlier can help you handle that volatility, and then you're a little bit more comfortable adding into strength as it actually breaks out of the base. Then what we want to do, just like typical breakout, we want to manage the position versus uptrending moving averages. And for IPOs, like I said before, we want to adopt more of a swing trader mindset. So if you're someone who's used to being a position trader holding for months and months, using the 50 SMA, using the 65 EMA, a longer period moving average, for IPOs, you want to be a little bit faster. By the time a stock after its top as an IPO, corrects the 50 SMA, you're already giving back 30, 40% off the top there. Even the 21 EMA can be pretty far at some points. So I use more the 10 EMA, the 21 EMA for maybe my trailing position. And I adopt more of a process to sell into strength, especially extensions, big gap ups after it's already made a nice move, because I always want to have that perspective of IPO base boom phases are more short-lived, and I don't want to be giving too much back, trying to hold for an outlier that's going to make a 2,000% move. Google made that move, but not all of them do that, and a lot of them make 50% pops and then they roll over. So I always want to adopt more of a swing trader mindset, locked in the profits when I've got them, and then trail the remainder of my position. So if it does continue to trend, I've got some exposure there. All right. Let me see if there's any questions here. Okay. I see someone pointing out that these are novice techniques. Well, the tried and true techniques work best in the market. I don't think nothing's changing. If anything, things are getting faster now, but IPO bases certainly still apply. We saw that earlier this year with CoreWeave. So, study the traditional patterns, because these ones have stood the test of time and work tremendously well. So just because this feels, basic, maybe basic is what works in the market. And you have to have a system, a setup to take advantage of characteristics like the IPO base. All right. So let's move on here. All right. Sorry about that. Looks like the formatting got messed up a little bit. So my honest experience studying and trading IPOs. Like I said, I've done some observations. So let me see if I can fix this real quick. Just move this up. There we go. So my honest experience studying and trading IPOs. First, based on my observations, and I did the IPO masterclass. I've done a lot of studies of my own on this matter. A lot of IPOs fail or make one quick move and then it's over. Like I said, they might make a nice 30, 40, 50% move, but then they roll over and begin their longer term basing process. So that's why I say, I like to use more of a swing trader mindset and understand that, this phase, even though it can make an amazing move, is often more short-lived. IPOs can be very choppy, expect shakeouts, especially near that base pivot. Like I said, I like to use smaller size when trading them, around 15% max, where I'll go 20, 25% max for more mature stocks. And then this is really key. The best success you'll have when trading IPOs is during strong markets. If you think back to CoreWeave and Circle this year, that happened, those great moves happened, and CoreWeave, I think, made an over 200% move. That happened right as the market turned off those April correction lows. So that's the time to really be focusing on IPOs if they're in vogue, if they're working, and look to see if there's any opportunities. And it's often really cool when you see an IPO come to market during a major correction, because if it's able to hold up, that's a tell to watch it very carefully and look for a strong move from that IPO base. So the key thing is there are times when IPOs are in vogue, and when they're not in vogue, they're not going to work. They're just going to be distributed and start their longer term basing process a little bit earlier. I also prefer more liquid IPOs, average dollar volume over 20 million. This is based on research that the IPO, the Lifecycle Trade crew did. I like even more liquid than 20 million. That's just kind of the base. So 30, 40, 50 million plus is ideal. And often the higher priced ones, the higher dollar volume ones, typically do a little bit better. So I like to focus on those a little bit more. But that being said, there's some IPOs that come public around $15 that then make tremendous moves. So just in general, I'm looking for that liquidity. I don't want to just be stuck in a stock and have it, have the character being able to gap down, 20% out of nowhere. I want it to have some liquidity, some institutional sponsorship as well. IPOs are more suited towards swing traders. You have to be nimble. I've said this a few times. You don't want to fall in love with an IPO, even if it's making an amazing move, because you want to have that perspective of studying a lot of IPOs and noticing that many of them, after amazing moves, will roll over, decline considerably off their highs, and then maybe recover and make strong, more mature moves. But for the time being, they're best left alone and left to base on by themselves. IPO bases can be tricky with shakeouts and expectation breakers. I talked about this a little bit. Often stocks, and this is really key, often stocks that have strong IPO boom phases are worth watching carefully later in their life cycles. So to use a great example, Palantir, it had an amazing move in 2020 from its IPO base. Then it did nothing for about a year and a half, maybe 2 years, before exploding up with an earnings gap and starting a more mature, strong move that went up 2,000%. So stocks that have really strong IPO moves are showing something special. To use a more recent example, A-Lab and Reddit both did pretty well during their IPO boom phases, consolidated a bit, and then set up really nice turns off their more mature bases, longer term declines. And they were tremendous winners in 2024 after coming public, that prior year. So pay attention to stocks that have strong IPO moves, even if you're not trading them. So even if you decide that, I'm more of a position trader, I can't handle those type of, precise entries as well as, fast moving stocks, but I noticed that this one had a really nice move. So I'm going to watch it more carefully, a year down the line as it begins to show some life and looks to start a more mature move. And this is what I mentioned here. I love to trade recent IPOs after their first significant corrections when they become a bit more mature. So like I said, I was focused on Reddit and A-Lab because they were interesting as IPOs. So keep an eye out for IPOs that came public about a year ago. Even if you're not trading the IPO move, keep an eye on those to potentially trade those further down the line once they become a little bit more mature. All right. so let's get into the case studies. The first one is the classic IPO to study, Google. Its IPO date was August 19th, 2004. The underwriters, it had like every underwriter in the book, as well as all the great ones, Goldman Sachs, Morgan Stanley, JP Morgan, Credit Suisse. Those are probably the ones I like to look for. Citigroup as well. And it had, all these banks involved as well. The IPO price was pretty high, $85 per share, and it actually opened higher. So it's already showing demand here. This was a 17-day, 13% deep IPO base starting day 3 of trading. So it moved up initially, began its base, and it was pretty tight, only 13% deep, and then it made an amazing move from there. The IPO boom move, 75% from the standard pivot in 34 trading days, and a lot more than that, over the next year or so, and 90% plus in 38 days from that early entry that we'll talk about. So let's take a look at this chart here. All right. So let me know if you guys can see this clearly. I might zoom in as well. But here is the IPO day. You can see big volume occurring here. And this is split adjusted here. That's why there's even more volume. But keep that in mind as you're looking at this. But look at this initial immediate demand here. Strong action those first 3 days. Then this is the day where we set the pivot. Of course, you don't know that right away. But as soon as we start declining and break down to this point, that's where you can start drawing this line of resistance across and say, okay, this is the IPO base pivot, at least for now. This is the key level I'm watching for a breakout. Then we decline further. And what is our playbook? What we're looking for is tightness. We're looking for a gradual bottom or a big shakeout reclaim that looks to start the right-hand side of the base. So in Google's case, what we did is decline further, and then we begin tightening. Look at this, 1 tight day, 2 tight day, all these range, a range is beginning to form here, another tight day. At this point, I'm looking for that early buy point, and I'm drawing this pivot across, even through these highs as well, and looking for a turn and breakout move through that level. We get even more tightening, 1 more day, 2 more days. So 5 tight days, really 6 tight days right below this level. This line becomes my buy point, and this becomes the range breakout, their early entry that is so often the best spot to get into an IPO base. So here you're watching this range. We've got an inside day that primes this range. I talked about those priming patterns in the prior webinar, where you've got further contraction within the contraction. And once you see this at the bottom of an IPO base, we're looking for a range breakout. We're expecting a range breakout. We're anticipating that a little bit, so we're ready to act in the moment. Then as it pushes through, we actually get a gap down, which is ideal. We get a gap down, slight gap down, and push higher through that range. That's where we're buying, setting our stop either at this low or the prior day's low as well. You're basically at the same level here, very tight entry, and you get a nice close here. And what's great here is if you build maybe a 10% position here, you've got time to look to add, a further 5% before it makes its way towards that IPO base highs. The next day we get a slight gap up, but really just a tight day overall. This is ideal action once you see a breakout. We're looking for either follow through or tightness. And in this case, we get tightness, and then we get the follow through the next day. And this would be the point where you could have added a little bit more if you want to add either that 5% that you're waiting on, or 2.5%, and look to add through the IPO high, that last 2.5%. But basically through this high would be another buy point as it reconfirms. We're approaching that high. We get a fade here off this IPO volatility. So again, this is a great example, because if you waited for the IPO base breakout, if you're buying right here, you get faded out. There's volatility here. It's in the eyes of the market. So that's why it's better to have more of a clean entry early on, where you've got cushion going into this volatility. So even if you added here, your cost is way down here. So you're able to sit through that volatility. We get another day where it basically does break out, but a little bit of a fade again. And then here this day, we get the strong close where you could look to add that remainder of the position that you're looking to, fill out your shares with. Then at this point, it continues to act constructively. Again, we're looking for stair-stepping action higher, where we get follow through higher, and then we actually begin to form out a range here, and just for about 5 days. And this would be a secondary buy point. If you didn't add here on the actual IPO base pivot breakout, this would be another point to add where it's breaking through this line of resistance. We have a positive expectation breaker because this close was weak on this day. We closed near the bottom of the range. Where do we expect this stock to go from this point? We expect it to fall through the downside. Instead, we get a gap up and push through the line of resistance. So we look to add a little bit here. And at this point, we're off to the races. And Google, of course, as they say, the rest was history. So that is a walkthrough of the price and volume action. Really what I want you to conceptualize and take away from Google is this tightness at the bottom of the base. This is what we're looking for, a decline and then tightness and refusal to move lower. If it refuses to move lower, it's likely going to start the right-hand side of the base. And in this case, Google refused to move lower because of this gradual tightening. Sometimes we get an upside reversal, a breakdown that then recovers the next day. But this is an example of tightening action at the bottom of the base. So let me see if there's any questions regarding this chart right here. Yeah, and we're going to go through some recent examples as well. Would you consider entering Google on day 7? So 1, 2, 3, 4, 5, 6, 7. No, not really. This is too short. Again, we're looking for a consolidation of at least 9 days or so. All right. This is at this point the IPO base is mature. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, about 12, 13 days into the IPO base. So that's when we can start looking, anticipating a turn. And I've got volume here, a destructive volume action along with this tight price action. And you've also got RMV confirming this tightness, this range as well, going to 0 right before it starts breaking out. And by the way, I like setting RMV to 5 for IPOs during their IPO bases just because they're a little bit more fast moving. And that gives a better picture of tightness within the IPO base. Yeah, IBIT's a good example. That's a even though it's a little bit different, it's an ETF. IBIT is a great example of a nice turn. All right. So let's move on here to the next case study. We're going to go back to 2015 with Shop. The underwriters for this were also pretty good. Morgan Stanley, Credit Suisse, those are good to see. At RBC Capital Markets, the IPO price was $17 per share. Again, it opened up higher than that, showing demand at $28. And this was a 13-day, 20% deep IPO base starting day 2 of trading. And the IPO boom move was 35% from the pivot in 4 trading days and plus 50% in 7 from early entry. And this IPO boom move was more a good example of a flash in the pan move where it made a strong move, but then it rolled over and needed to consolidate before actually maturing as a stock and actually going on a nice move, as we know Shop did from in the first year of its trading. So here's Shop. Here's the IPO base right here. And after this point, it just kind of starts consolidating even more. Again, these are split adjusted prices. So I think it was actually, it's done a 10-for-1 split, I believe. So just multiply in your head all these prices by 10. But here is the IPO base that I want to focus on. So first, there's an initial move up again. The IPO base high is set and pivot is set at this point after initial move up. And then look at this tightness. I mean, this should stand out. If you studied Google, this should stand out to you completely. Look how it completely refuses to move lower, where it goes tight from all these days. We get a failed breakdown that recovers back in the range. We get an upside reversal as well on this day. And then look how tight this day is. This is a setup day, as I talked about in the prior webinar. So at this point, if you're not already watching Shop, it should definitely be on your radar here. And we're anticipating a range breakout, which happens the next day. And this is a great example where, again, we get a gap down, strong move off the open, and a breakout. So this is the buy point where you look to put on, 10% size. And then once again, instead of fall through the next day, we get a tight day where overall tight from high to low, not much give back, looks good. And we get strong reconfirmation the next day following through. You could add that last 5% on this day as we push through this high right here. And Shop doesn't really look back, fall through the next day, fall through the next day, and the next day, and then we get a downside reversal. So again, thinking about more of a swing trader perspective, thinking about faster, yes, this is a strong breakout, but you're already up, 30, 40% in a matter of a few days. You'd likely be selling some into strength a little bit here. And on this downside reversal, if you're a very fast trader, letting more go and then maybe trailing the rest at that 10 EMA until this day right here where we get a close below that 10 EMA. So that's a good example of position management here. Selling to strength maybe on this day, selling more here, and then selling maybe the last third on this day as we actually break down. If it recovered and moved higher and respected that 10 EMA, you'd still have that last piece, but instead it breaks down and it saves you from all this chop here. It does set up kind of for another trade here, but never really gets going. And we get a downside reversal and breakdown here, which would be spots to basically get out of your position if you did look to trade this again during this period. But I think this IPO base, and again, visualizing that template for IPO bases, this tightness is a great example to study. And I love this range breakout as well. Tight day, reconfirmation. This is what we look for from the range breakout, and strong follow through until the downside reversal. And again, this consolidated for a few more months before ultimately, starting a more mature move. But this is the IPO base move, the IPO base breakout move that again profited about 30-40% in a matter of just a few days. And that doesn't take much position size to, move the needle in your account when you've got that type of move. And again, just a matter of days. So really good time compression, compounding ability when you trade these type of moves. Let me see if there's any questions with this one here. When adding to positions, you manage stops separately or on a combined position basis? Really good question. At this point, if I put on 10% here, that would be my only position. Then as I reconfirm here, my stop for that add would be at that low of the day or the close of this day right here. But as it closes, it's made enough profit already that, basically I'd probably move this stop up to that break-even point. Maybe that'd be a little bit premature. Definitely on this day where it actually breaks out, all my stops would be at this point, and really I'd be watching the 10 EMA as my stop. But as soon as the stock makes sufficient progress, 8%, 10%, that's the point where I would combine my stops on the position I bought here, the add I bought right here. So once we're at this point, that's when I treat it as one position. Until, this makes progress for you, this would be a separate position and this would be a separate position. So yeah, really good question there. Douglas says, hi, Richard. This seems complementary to the ideas of the lifecycle team with their different phases. Yeah, this is trading the IPO advanced phase if you want to use the lifecycle trade team's methodology. And I highly recommend their book. I'll also highly recommend the masterclass that we did just a year or so ago. This is very complementary to their methodologies. And they also like to use faster sell signals within the IPO advanced phase, smaller position size. They'll also trade, I think one IPO at a time. So they're incorporating those tactics to manage risk a little bit more effectively and keep the volatility down in their overall account. All right, cool. So getting into the third IPO case study. Here we've got InMode. This is actually the first IPO that I traded. I didn't trade it that well. I've learned a lot since 2019. Here the underwriters were Barclays Capital and UBS Securities. So you're not seeing that Goldman Sachs, JP Morgan. Not to say these aren't quite so good, but this is kind of maybe second tier here. IPO price was $14 per share. It opened around $7. So this would be a case where it actually opened lower than the pricing was, which is interesting because it still made an amazing move, but there wasn't that immediate demand that we saw right at this opening prices. This was a 26-day, 31% deep IPO base starting day 26 of trading. There's also a more mini IPO base that ultimately failed, so we'll take a look at that as well. And the IPO boom move was 35% from the pivot in 4 trading days and plus 50% in 7 from the early entry. So again, a very fast mover in a short amount of time. All right, and I'm going to go ahead and zoom in here, and we'll take this one more section by section, bar by bar, and let me zoom in here. So this was the opening price here. We immediately consolidate and form a short range here for 4 days, and then we gap up. So again, this is too short to be an IPO base, but we get a strong initial move out of this range. So if you're not already watching the stock, and this had really good fundamentals, I think this was, at the time I was doing this Excel sheet that took into account sales growth, everything, and created like an overall rating. And this was top of the list here in terms of momentum, as well as, I think sales growth and earnings growth maybe even as well. But we get a strong initial move from this range showing good demand. So again, we're not involved yet. This is too early for an IPO base, but we're watching for that first IPO base to occur. That begins here where we start to move up. Then we begin consolidating under this level for 1, 2, 3, 4, 5, 6, 7, 8 days. So at this point, this is an IPO base. So what we're looking for, again, is either an early range pivot or a natural breakout through this level. This one is whippier. You can see it doesn't quite have that same characteristic of Google as Shop, which is why it's good to show this example. But what I really want to point out here is look at within this IPO base. It starts to form a range. It's tightening. You're expecting the breakout through these highs, and then we get a breakdown. So this kind of defies expectations, but this often happens during those IPO bases. And what's really key is what happens next. The next day, instead of falling through the downside, which is probably what you would expect after a move down like this, we get a gap up and strong demand off the open. You can see there's, the open is basically the low price here. We immediately push higher. So this would be a spot to actually enter if you're being very attentive and very aggressive. You could enter off the open, managing risk at this prior day's close, and you've got a strong close here. But even if you don't enter on this bar, it's showing strength. It's showing a demand. And then it's setting up right again at this pivot. So what are you looking for? You're expecting follow through, and that would be the time to act. So we get a gap up, strong demand off the open again, and this would be your buy point if you're not entering early off the open. Setting your stop at this low of the day, it either works or it doesn't, and we get a strong close, and we're off to the races. So again, your stop is likely right here. If you entered right here, maybe you put on 5-10% here, another 5-10% here at the pivot. These stops would now be at this low, and really you maybe expect it to tighten here and reconfirm, but it should protect this low. This low shouldn't be violated on really a closing basis. What happens? We continue to move up, move up, move up, and then we kind of stagnate here. And we start consolidating again. And this is almost like a base on base in terms of IPO bases. I don't know if that's really a thing, but we're just reading price and volume here. And we start to look for more consolidation, and it looks constructive. But what happens here? We get a breakdown, and this would stop you out. Likely at this point, your stops would be at break even. This is a pretty decent move. And, here we respect the 21 EMA. That would become my new level that I'd be watching. And as we break below the 21 EMA, lets them go. Break below this level, lets them go. And then any remainder at this break-even point, you let some go. But we do get a breakdown that is a pretty vicious bar. But after a breakdown, what are we looking for in terms of price and volume action? If the stock is going to work, we're looking for a lack of follow through to the downside, a refusal to move lower. What happens? We go down a little bit more, but overall, we're still above this prior day's low. All right, still holding, forming a little bit of a short-term pivot here. Not necessarily actionable, but something I would mark to look for a push higher. Still consolidating. Look how it's tightening here. It's refusing to move lower. We've got this upside reversal bar, tight range forming at this low. So it's another sign that maybe you're not looking to act right away, but it's showing constructive price volume action after this breakdown and building out this base. Another day, another upside reversal. Sorry, I showed the next bar here. Another upside reversal. Again, constructive action, refusing to move lower. And here we get the follow through. Again, this range isn't necessarily actionable, but it is constructive. So it's something you look for back to the left within the base as you're looking for, as you're kind of assessing that stock. We get a push higher, and now we've reclaimed that 21 EMA. So we're looking for the next tight range to show. All right, pull back into the range pivot, acting fine so far, holding. All right, starting to form out a range. This is, actionable. We've got a tight range right near the 21 EMA, looking for a pop higher, but we get a gap up. So unless, you're good at trading those gaps and looking to trade those intraday turns, you're still letting it go. And it might not be on your radar because it's still relatively low within the space. We're still relatively early, so we're still looking for some tight range. All right, downside reversal, we'd expect it to move lower. What happens? It forms a nice range right near the 21 EMA. This is where I would really get interested in the stock. And this is where actually I did buy. So I did buy the stock right. I just didn't handle it right. So So here we have the tight range. Look how tight these bars are relative to other price action. And it's right near the 21 EMA up the right hand side of the base. This is my bread and butter my bread and butter setup. And here we get the range breakout and strong follow through. So again, entering this day, set your stop either at this low or the prior day's low, even the 21 EMA, that's tight enough to be a tight and logical stop. And what we're looking for is constructive action after the breakout, either tightness and then reconfirmation or immediate follow through. And here we do get immediate follow through. And this is another good example of why this early entry from this tightness near the 21 EMA is better than this breakout. Because right here, if you enter here, the stock's already moved strongly for 2 straight days. Maybe it follows through, maybe it doesn't. But after a stock uses up a lot of energy and moves strongly up to the pivot, what I'm expecting as a trader is for it to need to consolidate and rest a bit before it can, accumulate enough energy to reconfirm and continue on with the trend. So if I'm entering here, I'm automatically thinking, all right, I'm going to have to sit through some volatility. Versus if I enter here, I'm expecting it to immediately expand, give me profit cushion, and then I can sit with the volatility at the pivot. And you can see how it does fluctuate right here. So we try to move up, move down. Right here, if you entered, you're experiencing heat, you're experiencing pressure. You don't have a profit cushion yet. So it's harder to sit with than if you entered here and you've got cushion, you've got 10% cushion already. So we move higher. Again, some fluctuations at the pivot. We tighten nicely and respect this pivot nicely. So it's acting constructively. But again, if you're sitting pretty, if you're here, you're sweating a little bit if you entered at this level here. And then it starts to push up. So it formed that range. It needed to contract to set up that next move higher. And we break out higher. And I think I sold, here on this day, I think I got scared. Again, this was back in 2019. So I didn't hold for the big move, but had a nice move. And this is kind of what drew my interest to IPOs. Is the first one that I had good success with. So that's why I want to share this case study. But again, gap up, strong action, getting a little bit short-term extended, but again, trending within that IPO boom move. And let me go ahead and zoom out. Here is the range that we were just at. We got reconfirmation. And ultimately, we fade off highs. This is, again, sign of exhaustion. If you're a swing trader, you might take some off here. And then on this breakdown, versus that low, you take some off. And then maybe you're trailing the rest waiting for a close below the 21 EMA and letting the rest go here as we break lower. But again, really good entry right here. A little bit tougher here with the gap. This also may have been actionable off this correction here, this range contraction. But then we're getting a little bit extended, a little bit whippier, and we ultimately break down. And this declined, I think, 70% over the next few months after the end of this slide here. So we get downside reversals, breaks MAs. You can go ahead and dive into this chart at your own leisure at a later point. But ultimately, we do break down and I think take out this low as well, I believe. And ultimately, this does recover and make a nice move, but you don't want to sit through a 70% decline. You want to move your cash, take your profits. Again, think swing trader. Don't think longer term position trader looking for 1,000% move. Take what you've got, and this was a nice move, nice quick move, 50% in just a matter of days. So InMode, a really good example, and again, kind of what drew me into these IPOs in the first place. So I want to share this case study here. Let me see if there's any questions regarding InMode. Let's see here. David asks, when you get your bread and butter set up, how many days of earnings would you pass because it's too close to earnings? I would take it even if it's 5 days before earnings, but I'd likely sell before earnings. If I don't have 15% cushion, 20% cushion going into earnings, or I'm looking at the implied move, if it's not, more than that, I'm going to sell, but I would take the trade. If it's 2 days before earnings, I'm probably not going to take the trade, and I'd be watching more for an earnings gap, something like that. So hopefully that answers your question, David. Good question. Santiago asks, do you normally prefer to do trailing over 21 or 10 EMA? Hey, Santiago, why does it make sense one over the other? For very fast moves like IPOs, 10 EMA almost makes more sense because often these drops to the 21 EMA can be by themselves a drop of 25%. And these ones, when they're really going off, respect the 10 EMA a little bit more. I don't have it on this chart here. So for IPOs specifically, the 10 EMA likely makes more sense. But for more mature moves, the 21 EMA is kind of the main one I use to trail my stop. Andres asked, hey Richard, do the underwriters matter when analyzing the entry? I would say it kind of adds conviction. If it's Morgan Stanley, if it's Goldman Sachs, Citigroup, JP Morgan, that just adds a layer of conviction. It doesn't change necessarily how I handle the price action per se, but it might make me focus more on a specific name than another one. But ultimately, price action drives my decision making 100%. It's just like seeing that, say this name had 50% growth versus 20% growth. I'd focus on it a little bit more. It's kind of the same thing with the underwriters. The fundamentals, the story just helps add conviction to the trade. But ultimately, it's all about price and volume action, whether it sets up correctly, whether it gives me a tight and logical entry, whether it acts well from the breakout point. But really good question there, Andres. There's a question. Eve Bobak says she takes 50% of normal size position on IPOs. How do you handle position size for these? 100%. I talked about this already, but I might take a 15 to 25% position in a normal stock, a more mature stock, while I might take a 10 to 15% position in an IPO. So I do decrease that position size. Really good question. Where would your stop have been now in hindsight from where you got scared? Which gap low? So again, I sold, this is when I was newer to trading, bought right. But I sold, I think on this day after the gap and it started moving down. I think I sold close to the lows of the days. Sure, some of you guys can relate. I had a great profit going into this. I would want to give it at least the 10 EMA and wait for a break below that. So at this point, it goes up, it's doing nothing wrong. It doesn't even take out prior day lows really much. This would be the first warning sign. And then this day is where I likely have sold here as it breaks down here. And that's why this bar is so big, is likely a lot of people's stops got hit. A lot of people are selling, but it is a sign of a character change, especially taking into account this fade off highs. So now in hindsight, this would be the day I'd want to sell from this entry compared to this. This is a sell out of nowhere. It doesn't even break this gap up low. After a gap up, I'd be expecting now consolidation, tightening, pullback even, and even a pullback to the 21 EMA would have been normal in this case. So selling on this day is just it's an emotional sell back then. But now I know a little bit better, at least, hopefully. All right. Let's see. The lockup period, I believe, is typically about 6 months. So these moves often happen during those 6 months when insiders can't sell. And then that's, I think, what contributes a little bit to the natural decline of IPOs is finally those people who are looking for liquidity are able to exit their shares that they bought maybe in a seed round or, way early on. So that's likely contributes to the supply and demand factors that leads to those declines after around 6 months. All right, let's move on here. And hopefully you guys are enjoying this. Let me know in the chat some feedback. Give me a thumbs up or a quick message if you guys are finding this helpful. And if you are, please go ahead and leave a like on the stream. That'd be super helpful. And if you're not already subscribed, definitely go ahead and do that. All right. So let's move on here. The next case study we've got is ONON. So I wanted to use examples from the past as well as present because it shows how this setup appears over and over again. It's a cyclical setup. So here we've got ONON back in 2021. Again, underwriters, Goldman Sachs, Morgan Stanley, JP Morgan. You've got Credit Suisse in there too. So you've got a lot of high level names in here. So again, that would add a little bit of conviction to wanting to focus on this name. IPO price was $24 a share, open 35, so showing immediate demand. Another sign to be maybe a little bit more focused on this name if it does set up an IPO base. This was a 41-day, 31% deep, so a little bit deeper than the ones we've been looking at, starting day 3 of trading. And the IPO boom move was 35% from the pivot in 2 trading days, so very explosive, and plus 80% in 20 from the early entry. So let's dive into the chart here. All right, and let's zoom in here and take it more bar by bar. Here we see some immediate demand, but then we start consolidating around day 3. And you might see I've got a pivot marked from this level as well. This is because, this is kind of a key high, but this becomes a key high as well. But we basically begin consolidating very early on. Again, day 3 of trading. And let me zoom in even more. At this point, we've got a breakdown and we're just waiting for a base low to form. When you've got a breakdown like this, it's basically a sign, all right, watch for the base low. And we continue following, We're below the 10 EMA at this point, this orange line. And then we get this day here. And we're still in the downtrend, but this shows, to me, we've got a gap down, recovery a little bit here. So this could be the start of a turn. This could be a potential reversal extension, to use Oliver Kell's terminology. And we're watching to see if there's some follow through up to kind of indicate more that this could be the base low. Boom, there we go. We start to see a turn starting to happen. And what happens, which is constructive, a tight range begins to form with a key high right here. And look how tight it gets down here. Fade, but still within this range. So this can happen. Another fade, big downside reversal. Tight day, which primes the setup. So I'd be watching now for a strong move that sticks off this range low. And sorry, it's glitching around. I can't seem to hold it quite right. Here we get a breakdown. So again, we're expecting maybe a further move lower, but what happens is we hold and we hold. And now it gets interesting. This type of action really catches my eye, this tightness, and I'd be looking for a buy point through this level now, or even this high. There we go, another fade, but still within that tight range. And again, looking for a buy point. And here's where we get the range breakout finally. This is a little bit wicky. Again, these IPOs are a little bit finicky to trade. You might get a squat and have to re-enter the next day. But you can see here, even if you didn't buy this day and are waiting for more conviction, the next day we get that powerful move higher where you could enter as it breaks through and starts pushing off that pivot, setting your stop tightly and logically just under the low of the day, right at the pivot, and looking to enter, around this area as it starts pushing up on volume. And maybe adding a little bit through this high as well, where it actually takes out the wick. But this is the early buy point. So again, look at this gradual base formation, tightening, tight range, breakout, reconfirmation, and we start moving higher. So let's zoom out again. From this point, we continue to move higher. Immediate follow through, that's the best sign. We get constructive pullback to the 10 and 21 EMA. This would even be a spot to add a little bit or start a position if you haven't already. We get reconfirmation. And you can see this is more of a mature base. This is longer than the ones we previously looked at. And I want to show a variety of what these IPO bases look like. But we do push up towards this level. We get rejected down from it, but we find support at the 21 EMA. Again, constructive price and volume action. And then this one ultimately breaks out on earnings. So again, if you entered back here or even on the pullback, you've got cushion going into earnings. You're able to hold and you're able to profit. If you don't have a position yet, you're buying the base breakout and are setting your stop likely at this low of the day, and it's an earnings event, so either it goes and closes well or it fails, no problem, you'd be stopped out with a small loss. But it's better to have a position already here or here, so you've got cushion going into this event and are able to just maybe add on this bar. We follow through strongly, looks good. We're expecting it to move higher. Wow, that's a inside bar, and sorry it keeps glitching like that. It's something with the software, not me. Here we get the inside bar. We have a slight gap down and negative close, and we just become very volatile here. So again, swing trader mindset, you might be selling here into the strength as we reconfirm, selling maybe a third, maybe up to a half here. And then this bar may be selling even a little bit more because again, this is an 80% move here. That's as much as you can wish for with the IPO move, really. And we start fluctuating here, and then we break down below the 10 EMA. And this 10 EMA pullback, I have a note here, is 25% off highs. So you want to decide when you've got a great profit, how much are you willing to give back? And that can be part of your sell system. Am I willing to give back 10%, 20%? Giving back a little bit more and letting it fluctuate gives you more of a chance to catch a bigger move, but it's going to fluctuate more your equity curve, especially if it's a big position. So you want to decide that. So I'd be letting the rest of mine go as we break below the 10 EMA here, but likely selling more of it back in this area. And then we form lower highs, fail at MAs, and this does roll over. I think it does set up later on, but ON was more of a flash in the pan move and really strong move, especially with this earnings gap. And it broke expectations. You'd expect it to continue higher after the strong earnings move, but not all trades work out. And you have to manage risk in real time and manage your profits as well. Profits don't take care of themselves. You have to manage them and have a system in place to take profits into strength. And then as we roll over, take profits into weakness as well. Let me see if there's any questions here. And let me move over. Okay, cool. Let's see here. All right, so let's move on to the next case study here. And there we go. The next case study is Corsair, CRSR. This happened at the exact same time as Palantir, which I think is an important thing. Again, there's seasons where IPOs and IPO bases work really well. We saw CoreWeave and Circle act well together early this year. It was kind of Corsair and Palantir and the whole rest of the market acting well back in 2020. So I like to focus more on IPO bases when IPO bases have been successful and there's more setting up and they're in promising themes. So this happened back in September 23rd of 2020. We had Goldman Sachs in there, Barclays, Credit Suisse. I like seeing Goldman and Credit Suisse in there. Not to put down Barclays, don't take it personally. Yeah, I don't know. Yeah, Goldman Sachs is just more appealing and Credit Suisse, but it's good to see all of these in there. IPO price was $17 per share. It opened at 15, so slightly lower than the pricing. 12-day, 21% deep, so pretty typical here. And it started day 7 of trading. The IPO boom move was 125% from the pivot in 25 trading days. This one acted really well, and plus 150% in 26 from an early entry. So let's dive in here. And let's go back to the beginning. So this one, again, showed immediate demand off the IPO. And even if I'm not trading this, because again, there's no IPO base here, I'm letting it lie. It's good seeing this immediate demand. It's something that tells me to focus a little bit more on the stock if it does form an IPO base. Then the IPO base begins to form in this area. We start pulling back. We have a big bar down. Again, a key concept I want you to take away from this video is look for when there's a refusal to move lower. And look at this big bar. What do we expect after a bar like this? Follow through to downside. Instead, we gap up and hold, positive expectation breaker, and begin forming this tight range. This reminds me a lot of the Shop IPO base, if you remember from the second case study. Very tight under this level. We're watching for a breakout. We get a gap up, so a little bit tougher to enter here, and we don't have a great close. So likely I would either be stopped out or let it go at the close and be watching for another entry. Unfortunately, we gap up out of there. So you could buy the actual base breakout, but there's not a clean entry here. So again, even if the base is clean, there's not always a clean entry, but this is constructive price action. We move higher. We form almost another IPO base here where 1, 2, 3, 4, 5, 6, 7, 8 days consolidation. You could buy this breakout here, but likely you're shook out on this bar here or even this bar here. So again, this name, even though it made an amazing move, didn't make it easy. So again, we get a breakout, we consolidate, shook out, and then here we form another consolidation. And even if I got stopped out here, I'd be watching this name because it's shown progression, it's shown power, and this bar, I would know that likely either because I got shook out or just looking at the bar, a lot of traders, a lot of participants got shook out on this day as it broke through these lows, and then we closed right near the highs, right at within this range. So I'd be watching for another entry. We go tight 2 more days, and then this would be the day to act, or this way as well as we break out the range, stop at the low of the day, or the 10 EMA as well would be actionable. And from here, there's significant demand for many days in a row. And this is actually a 77% move. So pretty volatile name. And I'd be watching the 10 EMA as we just keep going up, and each day is stronger than the next. We've got little gaps in here. I'd be selling some into strength, so selling probably up to 50% on my position, and then looking to hold the rest until a sell in weakness. This bar, I let some go as we break these lows, and this bar as well as a close on the 10 EMA, or this bar as well as we break this low. I probably leave the rest of my position on the table. But this is a good example because it shows how difficult, even if the setup is nice, even if the stock is powerful, you have to be a little bit creative sometimes and keep trying the next setup in this name before you actually get the nice trend out of this. So a good example here, you get a negative expectation breaker because we're expecting to go higher. Instead, we break down, and then it forms another base and ultimately breaks down and rolls over. And I don't think this one has ever really recovered much, but a good example to show the IPO base here. So let's go back to the full spread here. So again, immediate demand, IPO base, kind of compound IPO base here. And then this is the range breakout that ultimately works and allows you to join on for the nice move. Then it forms out this base, downside reversals, signs of selling, wicks down, and we ultimately break down and roll over. So that is Corsair. Really nice move here, along with Palantir during that same time frame. And yeah, good example of more of a swing trade type opportunity here on this range breakout. Let's see questions here. Does DeepView have a list of recent IPOs? We don't have a native list, but what you can do is you can create, and this is what I have. I have a screen that is basically based on IPO date. And let me actually show here. Let's go to screens and IPO 6 months. So in the filters, we've got a filter for IPO date. So right now I have IPO date more recent than December 31st, 2024. So I'm looking for IPOs since then, basically. And you could set this to within the last month. You could set it within the last 2 months. You could also set it within a period. So this is how I look for IPOs. And this is part of my routine is I go through this list of names. This is how I've been watching this one, Clar, which has broken down, but look to be setting up here. There's some other names on this name list as well. I think CoreWeave is here. And I sort this list by dollar volume because I want to focus on the more higher dollar volume names. So all these are good, over $100 million volume. As we get down here, these are getting a little bit more liquid. And actually in my screen, if you see right here, I'm looking for a dollar volume of greater than 20 million. So that's in my screen itself. But this is a good example screen that you can run in DeepView to find these IPOs. And then you, of course, have to go through them manually and look for those tight ranges or, your personal entry tactics. All right. Yeah, good question, I think, from Lisa here. Do you consider IPOs from SPACs? I treat SPACs differently. I just treat it based on price action. And I prefer IPOs to SPACs, I think. Personally, I think they're higher quality. I think SPACs is a way for a company that doesn't have quite the quality needed to IPO to actually come to market. And often, at least in the 2020, 2021 timeframe, they were more just money grabs and more flash in the pan. Some of them made some great moves, but a lot of them rolled over and went bankrupt. So I like IPOs better than SPACs personally. All right. Let's keep moving. So the last case study we're going to look at is Tilray. And I wanted to include this one to just show the raw potential of this type of move, because this was an amazing one to study. Obviously, I didn't trade this one personally, but a lot of people have, and a lot of people made a lot of money, and probably a lot of people lost a lot of money as it rolled over because they didn't have sell rules. But this IPO date was July 19th, 2018. Cohen and Company and Nesbitt Burns, again, maybe lower quality names. This is a marijuana stock, so I think Morgan Stanley, Goldman Sachs, they're not really going to be involved. The IPO price was 17. It opened at 23, so showing a little bit of immediate demand. Again, something that piques my interest. 19-day, 36% deep IPO base. This is a more volatile name, so this is within character, that 36% deep. And it started day 3 of trading. The IPO boom move was 700% from the pivot in just 21 trading days, and plus 900% in 24 from the early entry. So just a 10% position, if you get a little bit of this, not too bad, right? And this just shows, most of them don't do this. This is an outlier, but it shows that potential that can happen from these IPO bases. So let's get into the chart here. And let's start with the actual IPO base. So we get that immediate sign of demand. That's a good thing. Again, it piques my interest. We begin forming the IPO base and draw down. We're watching for a gradual bottoming action or a refusal to move lower. Again, that's a key concept I want to share with you guys in this video. And this bar to me is really key. We gap up, look like we're breaking down, and then recover. And what's even better is we follow through to the upside shortly thereafter. So this would be the start of that turn up the right-hand side that I'd be watching for. Then we get a tight range forming. Look how tight it is over this 4 days. Very tight relative to all this price action. So here I'd be watching for a range breakout up the right-hand side. Then again, IPO bases aren't always easy. We gap up, try to push higher, and fade all the way back down. So if you tried it, you're likely stopped out. And if you're not stopped out on this day, you're stopped as it undercuts this low on the next day. But remember, after these big bars, you're expecting fall through to the downside, but if it doesn't, you want to make a note of that. And that is a positive expectation breaker, another Mike Webster concept, and it re-breaks out through this range. And this would be the first buy point or second buy point if you tried it and got stopped here. And this is the one that sticks. So again, buying here, stop at the low of the day, a positive expectation breaker. That's the entry tactic. We consolidate, tighten up for 2 days, and then reconfirm here. At this point, when we reconfirm, you can move your stop up to break even and even trail it at the 21 EMA, which is basically right at your cost basis once we get to this level right here. As we break out, we get fall through, tightening action, reconfirmation. Again, you're already well up from your cost basis. You're looking at the 21 EMA or the 10 EMA if it's marked here as your rule to manage your position, and maybe looking to start selling into strength if it really keeps going. Boom, this bar gap up. Likely a lot of people saw into strength. That's probably why there's a fade in off highs here, but showing a lot of momentum. So maybe you let 25 to 50% go here, but you're looking to trail the rest for a bigger move versus the 21 EMA or versus the 10 EMA. Keeps moving higher, gets crazy. This is a parabolic move right off the IPO base. This bar, very wide range. I'd probably be letting a little bit more go here just because it is such wide range. And, at this point, we're very far from the 21 EMA, so I'd probably tighten up to the 10 EMA. We tighten up and keep going. This is such an amazing move, guys. It's crazy. It's so cool. So even, at this point, it looks very extended, and then it keeps going. And at this point, you're seeing a lot more gaps, more signs of exhaustion. So you're just kind of holding on for the ride and maybe using the prior day lows as your stop if you're being very aggressive and, looking for a big expansion, climax top to sell the rest of your position. Keeps going, gets more extended. Ooh, we get a gap down. So maybe you're shaking out of your position here. If you're managing correctly, maybe you're managing more at the 10 EMA and you have 25% that you're sold through prior day lows and you have 25% left, and it keeps going, guys. It's crazy. Gap up and go. And then, wow, look at this bar here. This is what a climax top looks like. And this, sorry, it keeps grabbing here. So at this point, we have this huge gap up and just huge volatile bar. I think actually the day before this, I think the CEO went on Mad Money and was talking up Tilray. So I think that's what caused so much interest in this name the next day. And it's crazy that it happened right near the top. But here we go. Look at this volatile day. This would be a sign to sell the rest of your position and just say, wow, what an amazing trade. And just keep watching it. If it goes higher without you, that's fine. But after this bar, just the risk is getting way too big for a big gap down out of nowhere. And we get a big downside reversal. Again, very volatile, even compared to these ranges. And here comes the gap down. So that's what we want to prevent by selling into strength, is not being caught in a big gap down like this. And it might still happen, but you're protecting yourself selling the majority into strength, so your equity curve fluctuates less as you pull back. And let's go ahead and zoom out. Look at this pullback to the 21 EMA in 3 days. This is a huge drop. Then it consolidates, lower highs, breaks down. After climax top like this, the stock's done. It needs time to recover if it's going to set up again. And we get a breakdown, 21 EMA. This would be probably the very last point that you'd look to sell. And we just roll over resistance to 50 SMA. I think this drops precipitously over the next few months. But let's go ahead and take a look at the huge chart and just appreciate this stock. I mean, this is what we're here for. What an amazing move and a great example of a climax top. If you haven't studied this chart, go bar by bar yourself and think about expectation breakers. Think about where you'd be selling into strength. Where would you be holding it? Where you'd be selling it? And be really logical about it and honest. Like I said, I think just going through this here, I sold some on this day because it looked volatile. But in hindsight, this is a tiny bar compared to this bar here. And you can see the gaps. You can see the signs of exhaustion coming. And you want to be honest and write rules for yourself for how you'd handle a stock like this. I haven't held through many climax tops, but this is the type of action that you're looking for. All right. Let me know your guys' thoughts on this chart. What are you guys' takeaways from going over Tilray? Let me know what you think here. Just an amazing stock to study. And again, the early buy points allow you to manage risk when it's tight. And when it gets wide and loose, that's when you want to be selling into strength and getting out of the stock more than staying in. All right. So let me know your thoughts on Tilray here. All right, so the key points that I really want to emphasize today here, trading IPO bases. The IPO boom phase can present some amazing moves. We just saw that with Tilray as well as the other examples, 30, 50, 100+% moves. We saw that earlier this year with CoreWeave, with Circle, some amazing trade opportunities. But these moves are often short-lived and favor swing traders and that mindset of selling into strength and faster sell signals than trying to hold for, months and months. Looking for early entries before the IPO base breakout can improve performance and allow you to manage risk tighter. That's the whole benefit. You're able to deal with any volatility that happens at that pivot. And I just want to emphasize this again. Young IPOs are best managed with fast sell rules, 10, 21 EMAs, and 21 EMA sometimes is still a stretch. And selling into strength versus trying to hold, to the 50 SMA. I would never do that with an IPO personally. So that's kind of a key thing I want to emphasize here. Some recommended resources regarding IPO bases. First, I think you got to watch the videos that Mike Webster did on Google and eBay. He goes bar by bar. These are fantastic. They're on YouTube. If you just search Mike Webster IPO videos, these should come up. Mike is a fantastic trader and educator. I recommend these. And then also, I'd really recommend the Lifecycle Trade by Kathy Donnelly, Eve, Kurt. These are fantastic. And Eric, these are fantastic. And we also did an IPO masterclass with them, 7 webinars going really in depth into their research of IPOs, how they trade them. Eve goes really in depth into the IPO base and the super gap setup. These are fantastic, not just for trading IPO bases, but trading all phases of the life cycle of super growth stocks. So this is fantastic. You can really learn to hold stocks for their big moves from Kathy and to trade the fast stuff with Eve. They're fantastic educators. And this was 7 webinars. Each of them kind of go in depth into their styles and methodologies. It's really good. And I created a coupon code for 25% off, IPO Handbook. If you want to go ahead and pick that up, I'd highly recommend that. I learned a ton doing this webinar series with them. So definitely check out both the Mike Webster videos as well as the IPO Masterclass. And I'll drop the IPO Handbook code into the chat right here. All right. So any questions? And before we get into them, I just want to say a huge thank you for spending part of your Saturday with me. Definitely appreciate it. Hopefully you guys found something useful, at least a few golden nuggets. If you haven't yet, a big ask from me. Again, this is just part of the Trader's Handbook. We'd really appreciate it if you left a review on Amazon with your honest thoughts about the book, as well as the bonus educational materials. This helps other traders know that this is a valuable resource. And we're really close to 500 reviews on our book, which I didn't expect that to happen so quickly. So if you wouldn't mind leaving your review on Amazon, if you haven't already, I definitely appreciate it. If you send me a screenshot of just the submit button, not your review. Again, it doesn't have to be, I want it to be an honest review. If you send me a screenshot that you've done it on Twitter, I'll go ahead and send a personal thank you message. So please go ahead and do this. I'll drop a link in the chat that you can go ahead and click to do so. But I really appreciate it if you guys right now would go ahead and click the link I just posted in the chat. Leave us a review. This is a really nice one that we got just a few days ago. This is an addition to all other books about trading. This is the addition to all other books about trading I've been missing. It covers all you need to make a big leap in all areas of your trading. The book gives you a step-by-step framework to either set up a powerful trading routine or to evolve the process you have in place right now and improve your weak spots. A really nice review here. And I really loved the last bit. It has made my trading routine better organized, less frantic, more successful, and overall more fun. That's just awesome. Great to hear. So thank you again, Urban Tulip, whoever you are out there. Thank you so much. And I really appreciate you guys right now if you went ahead and left a review. Again, we're so close to 500 reviews. I'll be sending out a bonus that I won't tell you right now what it is once we hit that milestone. But I really appreciate it if you help us got to that number right now. It would make my day. So thank you guys so much in advance for doing that. And let's see if there's any questions here as well. Andres has 2 questions. Do you follow specific sell rules for IPOs in comparison to regular normal setups and sell rules? Yeah, like I said, for normal trades, the 21 EMA is more my line in the sand to sell my position versus with IPOs, it's faster sell signals. So again, it's more the 10 EMA than the 21 EMA. I'm much more likely to sell into strength with an IPO, make its IPO move than with a normal mature base. Let's see here. Andres, I just saw one question there. You said you had 2 questions. What was your other question? Let me know in the chat. Um, yeah, Robert says I wouldn't be able to hold Tilray into the end. 100%. I don't think I would at all. But yeah, Tilray is just an amazing stock to study. Like it's like Monster Energy. It's just one of those stocks that you have to say, wow, what a move, and try to study it and learn how to catch part of that move that could happen in the future. All right. Alex says, that was me on Tilray, made tons and lost tons because of no proper sell rules. Yeah, it's 100%. As the stock starts breaking down, now you have the knowledge to identify a climax top in progress. And you know that, you got to sell when it starts breaking down because it can give all that back and more. All right. Let's see here. Okay. Let me just show CoreWeave quickly here. Actually, I have it up. So this obviously was the recent Tilray that had an amazing move. From this pivot, it was up 250%. I caught a bit of this. I didn't catch it too well, but I identified it really nicely and actually called it out, pretty much live on Twitter as well. I saw this tight area down here and acted on it right in this area as it reconfirmed out the right-hand side. So again, the same playbook we've been talking about. Demand off the first few days. IPO base. What are we watching for? We're watching for a refusal to move lower and or a tight area to form. What do we have here? A breakdown that then refuses to move lower. And look at this tightness. RMV going to 0. This is, again, RMV 5 because this is an IPO base. What are we watching for now? We're watching for a break above this range. And we get a gap up. This is a little bit tough. Gap up, pull into the pivot. But this is the day to really act as it reconfirms. And it's almost a positive expectation breaker here where we close negatively, we gap up, and you can manage risk versus this low, this close, this pivot as well. Some pretty tight and logical spots. And versus the 21 EMA as well. Tight day. Breakout through this range. Notice I'm using this pivot, not this pivot, just because this is a key resistance level. This is the IPO base pivot up here, but this for me was more poignant, more important than this here. I want to get in before it breaks this level. But another actionable day, oops reversal through this low. Tight day on the pivot. Tight again. We're expecting expansion or, to the upside or downside. We get a shake lower and then another positive expectation breaker. It's almost a mirror image of this right here. This is a powerful entry tactic. So you could add more on this day, managing risk at the low, the 10 EMA as well. And then at this point, if you add here, so maybe you did 10% on this day, 5% on this day, my stop would be kind of combined at the 21 EMA here once it pushes out here. So on this day, my stop is likely at the 21 EMA and we're off to the races. And then look at this shake at the base pivot. This is because everybody's watching this. Earnings was happening right during this period as well. So that's another benefit of entering early. If earnings are going to happen right near the base pivot, you just can't really position beforehand. So that's why it's better to have some on as well. And then we break out and then we're really off to the races, trending above the 10 EMA. Again, you could just watch that moving average and be holding this entire time. And then reconfirms. And then we do ultimately break down and roll over. And maybe it's starting something new, but we'll have to see. But that's the recent Tilray type example that shows you the potential of IPOs. All right. I see a question about the founders webinar. Yeah, we need to upload that. That's on me. My apologies. We'll get that up as well and send that out. All right. Cool. So that's pretty much it for today's webinar. Again, I'll drop the link one more time to the Amazon review form. Again, it would be a huge favor to me and a huge thank you if you went ahead and left a review. It helps us out immensely, and I read every single one. So thank you in advance for leaving a review. I appreciate it immensely. And again, if you send me a screenshot on Twitter, either via DM or whatever, I'll send you a personal thank you. If you do it today, I'll send you a personal thank you. And I'll make sure to do every single one. So definitely leave a review if you haven't already. And also, if you're looking for a great gift for a friend, the handbook is actually over 50% off right now on Amazon. The link actually is in the description right now. let me go ahead and drop that in the chat as well. So if you're looking for another copy for yourself or for a trader friend, you can go ahead and pick one up at a great value right now. Again, over 50% off. So I dropped that link in the chat. I don't think there's a discount for the audio version, but this would be for the hard copy version. The IPO book, The Life Cycle Trade. That's the book by the Life Cycle Trade authors. The Life Cycle Trade. All right, cool. Perfect. Yeah, we'll send out the link later today to this recording. So thank you guys so much in advance for doing the review. And thank you guys all for attending today. Hopefully it was helpful to you guys. I appreciate you spending time of your Saturday with me. And best of luck this upcoming training week. We'll see what's in store for us if we get more follow through to the downside. But hopefully we've got some great opportunities in the future. And hopefully you guys can make use of this IPO base setup pretty soon. So thanks again for tuning in. I appreciate it. Leave a like down below if you enjoyed. Subscribe if you're new to the channel. And I'll see you guys in future webinars. Take care.